Getting teed up here. Got somebody, there you go, Scott. I see you in. I'm going to promote you to panelist. Super.
Did you promote me to King of the Universe? Because that, my friend, is what I like.
Okay.
Let's see where I am here.
I'd say I'd be king of the universe, but I'm too bald for that to happen.
Yeah. What was that? What was that?
I said I'd be king of the universe, but I'm too bald for that to happen. So, how's the weather up there? And you're in Reno, correct?
Yeah.
How's the weather up there?
Nice. It's cold. My wife and I are going to Sedona in next week, and kind of trying to escape a little bit of the weather, but it's not much nicer there, frankly.
Right.
Yeah, it's just fucking cold everywhere, unless you're in Hawaii.
I saw a meme and I said here in California we woke up to a foot of sunshine today.
There you go. I like that. A foot of sunshine sounds good to me.
Yeah. Let's see if we have some people jumping in. We're trying this 9 a.m. time frame, so let's see. The afternoons may honestly work better, but we can get rolling if you want to get rolling and broadcast the replay. So let's get in. Go ahead, and if you want to tee up your screen.
Yeah, I can't. I can tee it up, but I have to open this. I don't know if you can even see this.
Oh, I can't. Nope. So
perfect. And so, can you see it now?
Yeah, go ahead and put it in presentation mode. There you go. Perfect. Well, let's get rolling, because I always say, you know, time is our most valuable commodity, and we're going to be rebroadcasting this. So our time is our most valuable commodity, and right behind that is our money. And time is money, and well spent is always good. So this is a joint venture between Scott Burnett, the indomitable Scott Burnett of Burnett and Associates, and myself, Chris Middleton. I'm the founder of taxreductionuniversity.com. I'm the chief tax strategist there, and I've been doing taxes for about 15 years almost. It seems like that hasn't been that long, but I think I met Scott, it was about 7 years ago, I think.
Yeah,
you were presenting at a conference up in Reno that I went up there and didn't realize that was your kind of home base, but you were presenting and was super impressed. And since then, you're the only person I've referred to pretty much for corporate formations and corporate compliance. So Scott's here as a guest of myself and Tax Reduction University to, I would say, scare the bejeebies out of us a little bit. Is that kind of the idea, Scott?
Yes and no. I mean, if what we've been doing isn't what we should be doing, sometimes we need to be kind of woken up a little bit. So there'll be a process of that. Yeah. I think the good news is, as you and I know, is that we're going to be talking about a problem and coming to a solution. And that's kind of what business owners are driven towards, is solutions. And the good news for everybody that's listening, it's not tell you that you're doing everything wrong and then come to, and we're going to charge you to fix it. I think at the end of this program, you're going to be very happy to hear that there's a solution here and it's not going to cost you a dime. So that's good news.
Yeah, absolutely. And Scott and his process fit very well into, my philosophy, which is why I've referred so much to Scott over the years, is, my process is to educate. So provide education, provide evaluation. So once you've learned something, how does it apply to you? And then once you've been educated and had a chance to evaluate, then it's all about execution, because knowledge is not power. Knowledge applied is power. So with that, I'm going to tee it up for you, Scott. And, I think your presentation fits very well with the mantra of Tax Reduction University of change the way you look at taxes forever. So go ahead, Scott, take it away.
All right. Well, thank you very much for the introduction. And I want to tell everybody thank you to the Tax Reduction Institute. Tax Reduction University. My background, as we'll discuss, is in litigation. That's my specialty. I sue people, at least in my career I have. And one of the things that is the most challenging today is that we form corporations and LLCs for our business. We kind of rely on them a little bit for our protection and for our tax benefits. But the reality is we've joined a club. And sometimes when you join this club, corporations or LLC, we don't know the rules. We don't know what we're supposed to do. And then in law, what happens is you get sued, and then that liability protection gets taken away by a process called piercing of the corporate veil. And in lawsuits, as your only adversary, you have the IRS and an audit, or franchise tax board in an audit, and any state regulatory agency. And what they do is they try to do the same thing. They try to take away the benefits and the protections because of things that we didn't know. So our goal today is to talk about what we should be doing, how to fix it. And I kind of have a sort of a, I guess you might say, a very declaratory statement. I'm telling you, you're sitting on a liability time bomb, right? And so what do I mean by that? Well, when I'm talking about a time bomb, I'm saying you're sitting on something because you have an expectation. You formed a corporation or an LLC. Maybe your advisor, a tax professional recommended it, or a lawyer or a friend, or you did your own research. And you were told all of these benefits that apply, tax treatment, lower employment taxes, liability protection, and all of those things are true. But the problem is that once you form the company, you didn't start acting like a corporation or an LLC. You're still acting a little bit like a sole proprietor. So I'm saying to you, you're sitting on a liability time bomb because your expectation is different than the reality in which we're operating. So we need to fix that. And that's just part of our process today. So for most of us, you formed your corporation or LLC typically for two benefits, right? You did liability protection. So if I sue the corporation or the LLC, what's at risk is the assets of the company. What's not at risk is your personal assets, like all my sports memorabilia in here. So those are assets that belong to me, right? But if you sue my company, you could get my business assets, but my personal assets, my home, my bank account, my retirement, all of that's supposed to be protected. And in law, we call that limited liability. So we got that benefit. For most of us, we want better tax treatment. And we get that through these corporations and LLCs. It's like we get these opportunities that come with joining this club. But the reality is that about 95% of you don't even really have these benefits. And the reason that I'm saying that is because you're not acting like a corporation or an LLC. Now, why should you even bother listening to me? Well, I've been practicing law for almost 30 years now. I've done a lot of jury trials, but that's not really why I think you should listen to me. I teach tax law to tax pros like Chris and to other tax professionals around the country. I'm approved by the National Board of Accountancy for continuing education, the Internal Revenue Service. I presented a lot of the major events here, and that's actually where Chris and I met. But that's not why you should talk to me. And I've worked with thousands of clients and I do coaching. And so all of these things are good. But the reason that I'm speaking to you today is because I'm in the same club you're in. I'm a business owner. And as a business owner, we have a unique fraternity or sorority of people that are in our group. We're not like everybody else. We're not cut from the same cloth as everybody. We solve problems. We're leaders. We do things that are unique. And so you should listen to me, not because I have this credential, but rather because just like you, I'm a business owner. And just like you, I found out the hard way what can happen when you don't do compliance. So you would think in law school, they would teach you about corporate law and how to run them properly, but they don't. They teach you how to sue corporations and LLCs in law school. They don't teach you how to run them. So just like you, I was told I should form a corporation. I did it, right? And I went on for a number of years. My company got audited, and really this is sort of the backstory of how I became this educator and teacher and offer these services, because prior to this, I wasn't doing anything. I was just suing people and making a living as an attorney. But when my corporation was under attack in an audit, I realized that I wasn't really running my corporation like a corporation. I was running it like a sole proprietorship. And what I mean by that is I wasn't doing the formalities. So I had travel deductions and I had business expenses and I was running them all through the business. But my corporation exists in law as this separate legal person. And unfortunately, my corporation wasn't doing anything except the book was sitting on the shelf and I'd file my franchise tax every year and I was paying my fees, but I wasn't operating through the record book. So the audit revealed all the mistakes. It cost me $60,000 in taxes that I legitimately should have been allowed. But because I was running it as a corporation, because my corporation didn't approve of it, right, in terms of documents, which we'll discuss, then I ended up losing those deductions, even though they were legitimate deductions, because in the IRS code, there's a section called 274, IRC 274, and that's your substantiation regulation. And it requires you to document certain things. So big lesson. My mom called it the graduation from the school of hard knocks. So you and you should listen because I went through what is potentially something that you could go through, which is a very hard learning experience based upon the reality of the experience, which is we're not doing something and we need to fix it. So my background is I was a former deputy district attorney for Santa Barbara. I'm a trial attorney. I've done 60 jury trials. I have not lost a trial. I'm a best-selling author. I wrote a book with Brian Tracy a number of years ago. I've appeared on all the major networks. I've written articles for all the major business periodicals. I spoke at the United Nations on the Global Entrepreneurship Initiative. So my passion is teaching, and my passion is teaching you through this process that what you're doing is fine. How you make money is fine, but because of the club that you join, corporation or LLC club that you join, there are expectations that come with that. And my mom always said to me, a great expression, to whom much is given, much is expected. Sole proprietors don't have liability protection, right? They don't get tremendous tax benefits. But when you join this club, you get all those things. Well, to whom much is given, much is expected. And that's what we want to talk about now is what's the expectation for me? So in litigation, I would meet a client or a defendant, usually. They have the expectation that they're protected, everything's good. Then we get into an audit and then the reality sets in and we go back to that time bomb, right? This liability time bomb now that you didn't realize was there, it's just plopped down into your lap. And in a deposition, this is usually the look of what I see in the face of a person that I'm deposing when they realize the reality of the situation. You see, when you go into court, you better come correct. And the problem is in a deposition or on the stand, the questions that you're going to be asked are not going to be things that you are going to be able to slick Rick your way out of. You're going to have to own the space. And Chris and I will actually do that a little bit together. Chris, with your permission, I'm going to depose you in a moment here. All right. Okay. So this is how we find them, right? They end up finding out in the worst possible setting that the liability protection that they expected is gone. It's not going to be there. You're not going to be protected. And then what's at risk? Well, certainly the assets of the business are at risk, but not only that, your home, your bank accounts, your toys, but more importantly, your future. You see, because every entrepreneur that I ever sued, every business owner I ever sued, they didn't get to become a business owner because they had little dreams. They have big dreams. And every lawsuit, I stole somebody's future, somebody's dream of a better life, because that's what being a business owner is. It's your expectation of a better life than working for somebody. So litigation will open up the door to a lot of pain, but this is completely avoidable. This is not something that has to happen to you. So let's start with the basic premise. Simply forming a corporation or an LLC does not guarantee you anything, does not guarantee it. It creates the presumption. You have the presumption that you're protected. You have the presumption that you have tax benefits. But if you don't act like a corporation, if you don't act like an LLC, then you're not going to be given those benefits. And the way that that'll be disclosed or found out is through the process of litigation or audits. So think about it like this. You joined a club, and it's just like if we have a gym across the street from the office here. And if I went over there and I joined that club, right, there would be rules. So I couldn't show up whenever I wanted. There's hours of operation. And if I went in there, let's say barefoot, well, I would imagine the gym's going to kick me out. And if I don't wear a mask nowadays, right, they're going to kick you out, right? So in a club that you join, you have an expectation that there's rules that you follow. And if you don't follow those rules, well, what do? They're going to kick you out of the club. Well, when you join a corporation or an LLC, when you form one, you've joined a club. And the club then expects you to follow their rules. Now, I want to make sure we understand this. The rules are the same whether you are one owner in the company or you have hundreds of owners in the company. So corporate LLC formalities, as which we're going to get into next, are applied to everybody. Now, the benefit, of course, in your company, if you're the only person in it, is that there's not going to be a lot of arguing about your corporate decisions, right? So it'll be very easy, but you still have to follow the formalities. So let's talk about what that means. What is the formalities? So we're creating a club of separation between the owner, right, and the business. And there's a wall that insulates the business owner from the risk. So if there's an attack against the company is what gets sued and not the owner's personal assets or the owner. Now, if I'm the owner and I'm also the director or the manager, the president, the secretary, treasurer, in my capacity as an officer, I'm indemnified, I'm protected. As an owner, I'm outside of the corporation. So owners don't make the decisions for corporations or LLCs. You make the decision in your elected capacity as a president or a director, as a manager. Very important. And these lines get very murky with clients because of the lack of formalities. So the club of separation is what you basically have joined. You've joined a club. The first rule is the business and the owners are separate. So how do we prove this separation? Well, we do it through this book. Now, I'm showing you a book. I'm going to have a bunch of slides here on this book, but the record book is the representation of the company. And the minutes and the resolutions are the things that go in that book. So all that paperwork you may have gotten from whoever you formed it through, and that book is sitting on a shelf, well, it needs to come off the shelf, be opened up and looked at, right? Now, if you didn't get a book, you should get a book because the record book is something that they're going to subpoena. They're going to ask for that book. And if we don't have one, then we're already having a difficult time trying to prove that the owner and the business are separate. And that is our goal. So compliance is minutes and resolutions. It's got a lot of names, formalities, record keeping, all sorts of things. But at the end of the day, what it really is it's showing that you, the owner, and you, the person who's operating the business, are separate. How do I prove it? I do it through these documents called minutes and resolutions. So your company communicates, it makes decisions, it borrows monies, it leases space, it buys cars. And what I'll try to say to people is that it has a voice, right? It's making decisions. It's trying to decide what to do. Now, you're the owner, you're the business owner, but when you're making decisions for the company, if you're a corporation, you're making that decision as a director. If you're an LLC, you're making that decision as a manager. How do we prove that you bought the car as the manager? How do we prove that you leased the space or gave the dividend as a director? Well, we want a document, right? So your thoughts are the decisions. Those decisions have to be codified in a writing. When you join this club, that's the rule. That's the expectation. So you could imagine, oh, you got 60 jury trials, you won them all. Well, how easy would it be to win? I mean, anytime I subpoena somebody in these businesses, nobody knows they're supposed to do this stuff. And you don't think you're supposed to do it because why would I want to have a meeting with myself? That sounds so stupid. Well, because that's the law. And the law in almost all 50 states say the records of the company shall be kept in written form at or near the time of the decision, documenting the minutes, the meeting, and the major decisions of the company. So this formality that we're talking about is a requirement of the club you joined. So if you're going to disregard the rule, what do you think they're going to do when they find out? They're going to kick you out of the club. So the minutes and the resolutions, they're the voice. You know? You have a voice, but you can't speak on behalf of the company, because if you speak on behalf of the company, you're speaking as the owner, and the owner's not supposed to speak. And the last thing you want to be when you go into court is to be a sole proprietor. And that's what the court's going to do. It's going to treat you like a sole proprietor because you're not following the club rules. So record keeping is the stuff that goes in the record book. Bookkeeping, well, that's the stuff that you do on your own, like with your QuickBooks. Bookkeeping is going to be invoices, bank statements, receipts. You're keeping copies of how you spent the money. Record keeping is the permission slip to spend the money. Think about it. The company and you are separate. We have two people here. You have a name, you have a social security number, you have a bank account. That's personal. The company has a name. The company has a tax ID. The company has a bank account. These are independent of one another. So when the company is spending money, it has to be a business deduction. How do we prove that? Well, we prove it in part through bookkeeping, because that shows the expense and the receipt and all of that. But the permission to spend the money, remember, it's not your money, it's not your bank account, it's its bank account. So if it spends the money, it needs to document it. If you enter into a lease on behalf of your company, it has to approve it. If the company is giving you a distribution, which is great because you save on self-employment taxes, that's great, but the company's got to give you permission to take that out as an owner. So what we're really doing is we're giving this separate legal person a voice. Now, this is like the best partner you ever had, all right? If you've ever been in a partnership, there's always disagreements, right? In this, there ain't no disagreement. If you're making the decisions for your partner's always going to agree with you, right? So no matter what you do, the resolution is just the formality of it. It's the decision. You write it down. It's written. The company's not going to object. The company can't object. Frankly, if your company is objecting with your decisions, you've got big problems going on. But they're not record-keeping problems. They're intellectual, psychological problems going on. You run the company. You make the decisions. The company will always approve it. So what's the problem? The problem is we're not documenting those decisions. That's it. So it's a simple fix, really. Now, I always say this to people: is your company does a lot of talking, right? So when you are operating a business as a business owner, everything that's populating on the screen right now are examples of things that should have been documented or need to be documented. And when we do that, we're creating the voice for the company. And I got to be honest with you, your company talks a lot. It does a lot of things. It makes a lot of decisions. And all of these things that it does, we need to document and record. And there's a formality to that. We, the board of directors, or we, the managers, having met, having decided, doing this and that. These are the things that we want to make sure are in the record book. So at the time the company is under attack, we can prove that we were acting like a corporation or an LLC. So think about it like this. When you form it, you signed a contract. You signed the contract really with the IRS, with the county, with the state, with the city where you're doing business. You signed an agreement really with your clients, with your vendors, with your employees. And the agreement is that you're doing business with me through my corporation. You're doing business with me through my LLC. So the contract is that you're going to act like a corporation or an LLC, because if you don't act like one, they're going to kick you out of the club. So minutes and resolutions are required. We have documentation and procedures that are required by law. So whose law? Your law, my law, mother-in-law's, brother-in-law's. Who says this stuff? Well, It's codified in all 50 states. So we have the IRS's IRC 274, which is the substantiation regulation. And if you're a corporation, you have to substantiate your expenses or they can take them away. The state regulates it, all 50 states, as we discussed before. Minutes in the resolution shall be in writing at or near the time of the decision. The other one, though, the one that I want you to recognize is that your corporation or your LLC has two things. One is a set of bylaws, and the other is an operating agreement. And in both cases, those things say that the records of the company must be kept in written form. So, Chris, this is where you and I, with your permission, so I've got a record book here, and this record book is yours, Chris. We'll pretend for purposes of our discussion. And raise your right hand, would you please? You swear to tell the truth, the whole truth, and nothing but the truth, so help you God?
Yes, sir.
And then some. So in a lawsuit, in litigation, what I'm going to do is I'm going to subpoena his record book, and I'm going to go through it to make sure that he's following the formalities. He doesn't follow the formalities, I'm going to kick him out of the club. I'm going to ask the court to take judicial notice that he's not following the statute, and then he's going to lose his liability protection or his tax benefits. But what I wanted to share with you is how easy it is to impeach you. So, Chris, let's say, for example, we're doing this, and I would ask you, why didn't you do the records? Because obviously I can see you didn't do them, right? So why didn't you do them?
Wasn't sure what needed to be done.
Okay. A lot of times that's an answer. Another common is I didn't know, right? And it's my favorite answer. It actually is the most popular, Chris, because people always say, well, I didn't know I was supposed to do it. So here we are. I have your record book. I've subpoenaed it. I'm going through it, and first, this is when you're in trouble, right? When you blow the dust off the cover of the book. Now I'm looking at your bylaws and your minutes, and there's nothing in here. It's all, basically not signed. Nothing's been done. So, Chris, are you the secretary of the company?
I believe so.
Okay. Are you the owner?
Yes.
Director, president, secretary, treasurer, everything, correct?
Sounds like I have multiple personalities. Yes.
Yes. And you really, in corporate law, that's what it's considered. You're like the Sybil of the business world. You have all these hats that you wear, but you really are the same person. I'm the owner, I'm the director, president, secretary, treasurer, I'm the member, I'm the manager. It doesn't matter. I'm all of these people, and that's fine. You can be all of those people. So, Chris, when you testified earlier that you didn't know you were supposed to do record keeping, that's correct. Is that right? You said you did not know.
Correct.
Okay. Now, these are your bylaws right here. All right. And in your bylaws, do you remember signing those documents?
I plead the fifth.
Okay, well, it's not a criminal prosecution, so there is no fifth, but good try. So when you form companies, typically, they used to always give you bylaws now. Sometimes you don't always get them. If you don't have a set of bylaws, don't worry, you're in trouble already. Because if you don't have bylaws, you don't have an ingredient of the club that you joined, right? The other thing would be, if you don't have stocks certificates, right, like this company does, then you're in trouble as well. So a record book, again, very important for us. Bylaws are part of that. So Chris, when you sign these bylaws, that's your signature. And that's what happens with people. They sign them, they do all that stuff. But then they come into court and they don't know what they're supposed to do. So these are your bylaws, correct?
Correct.
And this is your signature.
Correct.
Okay. Do you remember why you signed it?
My attorney or CPA told me to.
Okay. And that's a real great answer, because that doesn't mean anything, right? That doesn't make you protected. It just means they told you to sign it. So when you signed it, you didn't know what you were signing?
Thought I did.
Okay.
Yeah.
Would it help if I refresh your recollection, reading the sentence above your signature? It says, I read and approve these bylaws. Okay. Now you're the secretary of the company, correct?
Correct.
Right. Let me refresh your recollection. Page 7, paragraph 2, secretary's responsibilities. I'll read them aloud as you read them silently to yourself. The records of the company shall be kept in written form by the secretary at or near the time of decision, documenting the minutes of the meeting, the major decisions of the company. So you're the secretary, correct?
Correct.
You signed the bylaws that said you would follow these rules, correct?
Correct.
So when you testified earlier that you didn't know, that was a, what's the word I'm looking for?
A lie.
Lie. Yes, that means you were lying. Yes, that makes you a liar. Very good. See, this is so much fun. And what happens right there when we do that is that we lose the liability protection. And it's not hard. I mean, that took us a few minutes to do, but really it's shorter than that. Every company that I've ever sued, every closely held business that I've ever run, and I sit on the board of directors for over 200 companies across the country, profit, nonprofit. And I work with some of the most well-heeled clients in the world. And I'm telling you, nobody knows this stuff. This is like the secret ingredient that lawyers love to just pull out and just knock the snot out of you.
If I can,
everybody that joins this club has to do it. And if you're not doing it, you need to fix it. Go ahead, Chris, you were going to ask something?
Yeah, if I can interject, because at the very beginning, I made the comment that our time is our most valuable commodity. And I would argue a business owner feels that pain point the most acutely, that you're slamming busy trying to keep up with chasing new business, keeping the business you have, and at the same time trying to maintain some sort of work-life balance for your home life and your mental health, right? So, I would imagine that when people say, well, I didn't know, or I didn't, what they're really saying is, I didn't take the time
right
to understand, and I didn't take the time, or I didn't realize how important that is. Is that an accurate or good summation?
Yeah, I think that's very fair. And I think that every single listener in our group knows on some level that they're supposed to do something, right? The trouble is that you don't know what to do. And you go to the internet and my God, what a pile of crap that is as far as learning something. Because if you look for an answer and you don't like the answer you found, you just go keep looking until you find an answer that you do like.
Right.
And so there's nothing in there that is absolute, right? So when we know we're supposed to do it, but we don't know how to get the answer, typically what we do is we procrastinate and just postpone it. And our perception is, oh, well, I'll get this when I need to. Well, if you get sued or audited, you're prohibited from doing it. The law will not allow it. And so these are things that we need to see as a problem. So if you're listening and you're saying, well, I'm not doing that, great. Best thing that can happen, because we're getting to the point, well, let's fix it. And at the end of this, through Chris, through his program, you're going to get the service at no cost. So we're identifying a problem. We're really driving it home, but it's important because if you understand why you do it, it'll keep you doing it. And that's what we want, because as long as you're a member of this club, you want to be following these rules. So as required by law. Not my law, not your law, federal law, state law, but more importantly, your company's law. It's bylaws or operating agreement. And that's how they'll impeach you. And it's embarrassing, right? And it ain't funny if it's happening to you. So our goal here is to kind of get past this problem and look at things that we should have done, right? So these are actions that should have been documented. For a lot of us, we are S elections. We filled out a form, but there has to be a resolution authorizing it. Right, S election is the bookkeeping is the 2553, but the record keeping is the authorization to be an S election. Purchases of leases of equipment, acceptance of a tax professional, believe it or not, is a major decision that we want to document. Qualified in multiple states, which is going to become a more common practice going forward, because all states now are really leaning into providers that are doing business in their states. Issuance of dividends and distributions. If you are operating as a corporation, there's 6 ways that money can come to an owner: wages, fringe benefit, dividend distribution, loan, rent, and royalties. If you're taking money out of the company other than wages, right, you better be documenting that, because the IRS only sees money coming out, and they would like to know why this money's coming out that you are reporting or not reporting as wages. So all of this is for your benefit. Waiver of notice to hold meetings. This is a curious one, but Corporations have a requirement to give notice to the shareholders that they're having a meeting. Now you're the shareholder, you're the officer. Do I have to give myself notice that I'm going to have a meeting with myself? The answer is no, but you must waive that requirement because that requirement is in your bylaws or in your operating agreement. So there's little things in here that are kind of like unique to corporate law, and you'd have to understand the whole history of corporate law. But the basis of this is we have to prove and consistently show separation. Other things, retirement plans, fringe benefit, if you did anything with PPP, you know that part of the repayment is going to be authorizations and resolutions, so you've got to have that together. Issuing stock and membership. This one is the easiest one and probably the most fun. We'll go back to Chris's record book. Chris, remember, you're still under oath, right? And we have the certificates in the record book, and I have your certificate, Chris, and there is no certificate, right? Nothing is signed, and this is real common. You get a corporation and you never write your name on the certificate. So, Chris, do you go by any aliases?
Hey, you, is that like?
Hey, you? No, I mean, no other names that you're known by?
No, Christopher, which is.
Okay. Well, I'm confused. Who's Mr. Specimen? Who's Mr. Sample? So if in your record book, the only certificate that has a name on it is the sample one that they gave you when they formed it, and everything else is blank, and your name ain't Sample or Specimen, then you don't have a properly formed corporation or LLC, because the certificates of ownership is the first thing you get. So think how easy this is going to be. Just look at the situation that you occupy now. If I walk in there right now and I subpoena that book and I see Sample or Specimen, I don't see any certificates. I don't see any ledger done. Lights out, game over. You know, this isn't, playtime. This is real time. This is the stuff that really will get you into a lot of trouble. So as we do this, right, and we're doing all of these examples, that's a great one, because that's the first thing I'm going to do. I'm going to get that subpoena and I'm going to get those membership certificates and look at them. All right. Changing directors and officers, taking a loan. This is a classic one. Chris, I know you see this a lot. Clients borrow money from their company, or they loan money to the company. And then you have, when the company's flush, the money comes back to the owner. Well, if we don't have a resolution for the loan, right, and we don't have a promissory note, you're not treating the company like a separate legal person. You're treating the company like your piggy bank. And the IRS loves shit like that. That's how they really get you. So you've got this money coming out of the company. Now think about it from the auditor's perspective. You got this money coming out of the company. You're not declaring it as a K-1 or payroll or anything. It's just money coming out and it's not being reported. Well, what is it? Oh, it's a loan. Well, who's saying it's a loan? You're saying it's a loan. Who should be saying it's a loan? The corporation should say it's a loan, not by verbally saying it, because I don't think anybody has one of those Harry Potter talking record books, right? This thing has got to be opened up, click, the 3-ring thing pulled out, the certificate is pulled out, and then here's the authorization. Remember, your company can do anything you want it to do, right, within the law, but it has to be documented. And then the burden of proof shifts back to the service to prove that it wasn't a loan. And that's really an impossibility if we have everything done right. So all of this stuff benefits you, capitalizing the company, documenting that fringe benefits, opening bank and brokerage accounts, all of these things matter. Now, in law and in business, if you're a business owner, you have predators, just like in nature. If you're at the water hole and everybody's feeding at the water hole, there's predators that are surrounding that water hole. And who are they attacking? Chris, who do you think the predators attack?
Oh, the weaker
Yeah.
link.
You don't attack the strong in the herd, because then you'd be in for a fight, because there's plenty of people out there that are the weak of the herd. Well, in business, we have predators, and they're called lawyers and IRS auditors. And they're looking for the weak of the herd. And the weak of the herd are the people that are operating as corporations or LLCs, but they're not following the formalities. So if you're not playing by the rules of the club, when these predators attack, you're the weak of the herd. You're the one that they're going to go after. Now, if I subpoena a record book like this, just as an example, and I open it up and I see certificates are issued, resolutions are done, annual meetings are done, everything's there, then you're the strong of the herd. Why do I want to waste my time with you when I can find somebody else that's not following these rules? So again, just think about where we are. These people, these predators, they're out there. And if you're wondering how they're going to figure this all out or how they're going to know, well, if you're a lawyer, the first thing I'm going to do is I'm going to subpoena Chris's books. I'm just going to look right into his books and I'm going to get a real good sense of whether he's following those formalities. The IRS does the same thing. They try to pierce your corporate veil. They want to see also the book. They want to understand who the shareholders are and all of that. And when you're not following it, then they can pierce your corporate veil and hold you liable as well. And the IRS's job is actually a lot easier than mine. As a trial attorney, I had to get you on some depositions and do all this stuff. IRS auditor, all he's got to do is this. He's got dividends and distributions coming out of the company, or you loan money to the company. I've got the tax return, the 1120S. I've got the record book, and they don't match. Easy peasy lemon squeezy. And this is the first thing they're going to do. And this is all governed under IRC 274. So if they attack your company, you better be dressed and ready for the dance, because you're not going to be able to fix that problem, and you sure as hell are not going to be able to slick rip your way out of it. A lot of people that I have come across as defendants, great salespeople, great everything, and they think, I'm going to dance my way out of this one. They're going to talk their way. You ain't going to talk your way out of this. I'm going to back you into a corner, just like we did with Chris on the bylaws. And at the end of the day, you're going to be personally liable. And the penalties with the service are extraordinary. If this was street, this would be referred to as the VIG, and there'd be an enforcer going after it. But there are huge penalties for non-compliance. And again, innocent mistakes mean nothing, right? This is not, you don't get mulligans in the business world. So if you don't know what you're supposed to do, you don't get a do-over. They're just going to penalize you for your lack of knowledge, like they did to me. Now, I didn't do anything nefarious. I didn't do anything wrong. I just didn't document. And if I did, then all of my deductions would have been allowed. But because I gave my power to them by not doing it, they took my power away from me. So my corporation, at the time, didn't protect me. All right, the expenses disallowed. And there's so much stuff out there. And that's why Chris and I really have a kinship, is our goal is to teach and make people do the right thing, because doing the right thing is so much easier than being ignorant of what you're supposed to do. And that's the beauty of all of this stuff. So what are your options? Well, first of all, look, you made a great decision by forming a corporation or an LLC. We want to keep that, right? So really the remedy here is fix it, right? If you're not doing it, you got to do it. Period to the end. This is a club. It has rules. You can follow those rules. Simple, right? We can follow those rules and we get to stay in the club. But if we don't want to follow the rules, then you really should get out of the club, because you're not going to have the protection. You're not going to have the benefits, and you're going to find that out at the worst possible time. So easy fix here. All we have to do is get the minutes and the resolutions. And remember, minutes and resolutions are the only thing that stands between you and the predators. Every time you don't do a document, you give ammunition to your adversary. So we don't want to give them ammunition. We want to do what we need to do. And the fix for this is even easier. So ask yourself this: are you sitting on a liability time bomb? You've listened to this entire presentation, right? I've mentioned to you multiple things. We've talked about resolutions. We've talked about minutes. We've talked about major decisions. We've talked about stock. We talked about your bylaws. Ask yourself, Art, is it possible that if you were under attack, your company wouldn't actually protect you? I would say about 95% of our audience would agree that they're not ready for that type of an attack. So what do? Well, we're going to fix it. So Tax Reduction University, Chris's company, right, has allowed me the opportunity to teach this to you. But more importantly, they're taking care of this for you. They are going to offer to you, if you are operating as a corporation or an LLC, my company will do all your minutes and resolutions for you for an entire year. Now, the way that I do that is I call you once a month, right? We need about 5 minutes, right? So remember you were talking about time, Chris, right? Well, we need 5 minutes a month to protect you. And in that 5 minutes, I'm going to ask you what you did. You're going to tell me, and I'm going to create all the resolutions. So we, the board of directors of Burnett and Associates, have agreed to do the following: buy a car, into a lease, blah, blah, give a dividend, give a distribution, borrow money, etc. Signed by you, signed by the person who's authorized. So Scott Burnett, director, right? You'll print that out, put it in your record book, easy peasy, lemon squeezy, no problem, right? So this offer is available to you as a gift from Chris. He's taking care of the fees. You don't have to pay for it. So how do you take advantage of it? Well, for 1 year, we will do this to you. And I guess the question would be, well, what happens after the first year? After the first year, if you want to keep the program, right? So a whole year of getting it for at no charge, at the end of the year, it's $299 a year for the service that you will see. So after an entire year, if you feel like it's a good value, then keep it. If you feel like you learned everything and you're doing it right, fantastic. Happy to have been a part of that. Our goal is to get you operating properly, making sure you know it, to take advantage of the offer, easy. So there's a link here, and I don't know if you're familiar with these, bit.ly, so it's bit.ly / and it's case specific. So you really do have to type this in the right way. Capital TRU, Tax Reduction University, LAPS, that's our program, Lawsuit Audit Protection Service. So our program is designed to protect you. Chris is providing the vehicle in which we can do it. And all we need you to do is go to that link and register. Now, if you click on that link and go, you'll see right there that the offer, it's a $299 value. Chris is taking care of the first year free, right? It's all of the services that are included. We do contact you twice a month, once by email and then once by phone. So it's an easy way for us to set it up. You can dictate to us really how you want us to communicate. On that form, you'll see all you have to do is complete the information, your name, email, and I personally will be calling all of you. My job initially is to get you enrolled, understand what you have, where you are in your journey, and make sure that you're operating it properly. All right. So everybody that enrolls, I'm going to do an initial consultation with all of you and get you on track with our paralegals. All right. So let's fix it. It's free to you for an entire year. This is the great deal. I don't see how you could, I don't know, can you screw up free, Chris? I don't know. Free is, it's the best value in the marketplace, but it is what I think is critical. If you're in this club and you're not following the rules, they're going to definitely kick you out. So there's the link for you guys to take advantage of it. I hope you will. I will talk to all of you that sign up personally, and we'll get you set up in there. All right.
Can you go back one slide, Scott? Just to that one slide. Perfect. So I personally, and the reason why, I have Scott as part of my team is I personally am a client of his with both of my companies and have been for several years. And I can attest that really it is as simple as what he said, and understanding the why. Why did you form your corporation? Liability protection, asset protection, tax savings as a vehicle. Understanding the why really should be your biggest motivator to say, now that I've done the why and done the thing, how do I protect that why? And really what Scott has done here is shown us that, to protect it, it's very simple, but people just don't do it because we get busy. I would say it's the preoccupied parent syndrome for those parents, right? I know that I should not feed my kids McDonald's as often as I should. I know that I should be giving them more exercise, but you know what? When you're working hard and you come home at the end of the day and it's easy to be like, all right, let's grab McDonald's and plop the kids on the couch to watch the boob tube for a few minutes, right? I know that that's not optimal for my kids, but as a preoccupied parent who's slamming busy all the time, that probably happens more than it should, right? So that's, I think, how we are with our businesses. We know in the back of our mind what we should be doing, but we just don't take the time to do it. And I can attest that it's as simple as Scott says. With his team, they reach out once a month by phone, once a month by email. I've gotten to the point where I get I see the number coming through, and I'm like, oh, that's Mason or one of Angie, one of Scott's team, reaching out saying, hey, Chris, did you have X, Y, or Z this month? And then I know that a couple of weeks later, if I don't pick up the phone, I'm going to get an email, and I can pop them an email back. So you're right, Scott. It's kind of hard to screw up free. It really is free for 1 year of service, and that's an incredible value. I would argue way more valuable than $299. But that's what you charge for that compliance service. That, what do you call it? The lapse legal audit.
Lawsuit audit protection service.
Perfect. So there's your call to action. You know, it's pretty hard to screw up free. Have a conversation with who I would consider one of the most brilliant attorneys that I've met in my career over 15 years. Scott knows his jam when it comes to business and tax law, and he integrates very well with tax professionals. And this is where there's that gap where people know and get information from their accountant, but they don't have a connection between the legal side and the accounting side. And I think this is where these two marry up. So
Yeah.
awesome. So
All
Scott,
right.
incredible job. I don't see any questions from our participants out there. So like Scott said, the bit.ly link, it is case sensitive. So the bit.ly/true lapse, and that stands for Tax Reduction University Legal
Lawsuit audit protection service.
Lawsuit Audit Protection Service. Perfect. So make sure that's capitalized, and then connect with Scott there for that free gift to you. And like I said, our time is our most valuable commodity. So Scott, we're right at about 50 minutes. I know we blocked out an hour for this, but I'm going to give you 10 minutes back and just say thank you for jumping in today.
I appreciate it. Thank you all. And looking forward to working with you guys.
All right. Make it a great day, and bye for now.
Bye-bye, everybody.